All right, hello everyone. Welcome back to my channel. Today I am going to do another market update. It's supposed to be a Monday market update show, but I will not be doing that on Monday because this week I'm kind of busy on Monday and totally forget about this. I'm gonna do this on Wednesday though because I know that there's a lot of information, there's a lot of change in the market recently. So I just want to give you a very fast update on what's going on nowadays, and so that you can see how the market is has been changing for the last couple weeks. Okay, so let me show you my screen. That's gonna have all the information that I'm gonna share. All right. So first of all, I want to say that all of the charts that I got from here is collected from Concord Associates, except for one chart from for the mortgage interest rate is collected from Freddie Mac. Everything else is going to be from Concord Associates. So thank you so much for providing the information. First of all, we are looking at right here the Comfort Market Index. This is the number that the Comfort Associates um, show to see how the market is moving. Basically, the index is greater than 100. It's going to be leading to the seller market. Greater than 100 is going to be a seller market, and less than 100 is going to be a buyer market. In this case, of course, when you're looking at the first column right here, every single number is greater than 100 points, right? So all the market, all the city, all the big 17 cities are still in the seller market. However, though, if you're looking at the next two columns, you're gonna see that this is a change happening from last month at the same time. April 5th, right? So the change here is negative, right? Negative 10 for Avondale. Fountain Hills is 15%. Peoria is 27%. Buckeye is 23%. Queen Creek and Paradise Valley is 26%. And Cape Creek is 28%. Every single cities also have a negative change, meaning that they are actually decreased and is actually moving toward the buyer market. Now, when I say that we're moving toward the buyer market, it doesn't mean that we are in the buyer market yet, because you see that all the index is still greater than 100, right? Even Buckeye is still 100 point higher than the buyer market. So we still need some more time for the market to move completely to the buyer market. How long? No one knows. But we know that we are we are heading to that way. Now, one of the reasons why that the index going slow, as you know, is the interest rate, right? So this is the number from the website called the Freddie Mac, right? This Freddie Mac is a really big company backed by government, I think, and they collected all the interest rate. This is the average interest rate for the entire USA. Okay, if you only focus on the blue line, okay, if you only focus on the blue line, that is the 30 years interest rate for 30 years interest rate, which is a very common product for the US right here. As you see here, the interest rate going really high, right around December 16 of last year, and after that, interest rate keep going higher and higher, and up to this point, it's already reached about 5.27%. All right, 5.27%. If you're looking at the further distance, though, at the 10-year mark, okay, if you're looking at the 10-year mark, it is actually the highest for the last 10 years, okay? Because of inflation, Fed has increased the interest rates, and therefore the mortgage interest rates also be impacted. And for that reason, it's already reached the highest point for the last 10 years, okay? Now, I just want to point out that this is actually the main reason why a lot of buyers pull back, okay? Now, when I say pull back, it means they intentionally pull back, right? Because they don't want to pay too much for the interest rate, okay? And they hope in the future it's gonna be reduced, the interest rate in the future, and they're gonna jump back in. Now, I have a video talking about that as well, whereas in which I talk about even the interest rate going lower, and because the home price is still going up, right, you actually end up paying more for that situation. But that's another video. In this video, though, for those who the demand also reduced, or not only because someone who pull out of the market because they don't wanna pay that high, but also there's someone who are also forced to back out of the market because they no longer to qualify. They no longer qualified for the loan for this, for this such high interest rate, right? So they used to be qualified for, let's say, 2.8, 2.5, 3%, right? What if they built a house last year? Now, this is a very tricky situation. What if they built a house last year in December, whereas they qualify for a 3.3% interest rate, but now it's already 5.2, so but they may no longer qualify for that rate anymore. So those people will no longer be able to buy the house for that reason, right? Unfortunate situation. So the demand is not only intentional, but unintentionally, the buyer is no longer able to afford for such a high monthly payment anymore. Okay, so that's number 2 that I want to share with you. Number 3 that I want to share with you is come back to the Comfort Associate, right? This is the days on market. Right, this is the days on market right here, and as you see, the red bar is 2020, the blue bar is 2021. Of course, you can see that the 2021 is actually the lowest, right? In 2021, if you put a house on the market, you get it sold right away within a couple hours, actually. In 2020, you may have a little bit challenging, but it's better toward the end of the year, right? In 2022, now we're going to see a very weird situation in which it's supposed to follow the trend of 2021, but it's actually behaving more like 2020. Whereas it's going up right after the week 11 around March and April, right? So it's going up. It's going up. Okay. So therefore, the number, when the days of inventory, meaning that if nothing happened on the market, right? If nothing coming onto the market, new listing coming onto the market, it's gonna basically take that certain amount of days to get sold the remaining. So in this case, it's about 24 as of right now. That number is not very substantially high compared to the history. Okay, we're gonna show you the chart for the last 10 years as well, for the last 20 years actually as well. But we should monitoring this because you know why? Because this is a very quick increase. This is a very quick increase, a very sharp increase, right? So if it's keep going, so it's very soon it's gonna reach a very high point that we're gonna talk about. Okay, so I'm gonna keep monitoring this number so that we can see if it's gonna take longer to get sold on the market, right? Then we can see that the number of listing gonna increase on the market very quickly as well. The next chart, which is show the days inventory for the last 20 years, and as you see here, we can see it right now as of April is about 31 days on the market. As of now, it's going to be 24 days on the market. Okay, so it's going down. The days on the market is actually going down, back down from April, so it's less. Now, even though we see the reason why you see that now is this is the weekly chart, right? On average, it's still going up. On weekly, it's still going up, but on average, because we just recently go into May, so it's still not much of data in May to put in this number to put in this chart, right? But we can see that from March to April is increased 3 days, all right? But you can see that it's no longer nowhere is near the 54 or 96 or even the highest point of 425 days in April of 2008, where we reached the peak of the housing crisis, right? So it's still a very long way, but again, we can see that there's a very sharp increase, which would cause a caution in me. So I'm gonna keep following that on the days on inventory, and I'm gonna keep reporting if anything change happening. All right. The next chart that I'm gonna show you is actually from the MLS itself. This chart is actually show the number of active listing, the number of new listing, and the number of pending listing, and then the number of sold listing in from March of 2021 to April of 22. So I can remove everything else and just leave the active listing for now, right? This is the active listing. Well, actually, let's show the new listing first, right? This is a new listing. So throughout Maricopa County, as of right now, as of April of 2022, on average, we're gonna have about 11,000 about 11,000 new listing coming onto the market, right? In March, we have about 10,000, around 10,900 listing coming onto the market new. Okay, as you can see here, it's go down all the way down in December of 2021. Very little listing coming onto the market because this is also during the holiday season. No one want to sell, but after that, it's keep going up, right? As you see here, even though there's new listing on the market, it's still not going higher than the highest point in July of 2021 yet. So it's still going, but we're gonna look out to see what's happening here. The number that's more appealing to me is actually the active listing, right? The active listing gonna be including the new listing plus all the remaining listing from last month that have not been under contract yet. So we can see that the trend that's starting from October, right, is going down to March. But going to April is actually the active listing is going up. This is the reason why we see the more supply on the market, because again, the demand is lower, right? No longer a lot. The buyers on the market is less, so the house sitting on the market actually longer, and therefore is actually more active listing on the market. If you're looking at the pending listing here, which is the one that is under contract, right, is actually decreased from March to April. That's a big decrease from about 9,500 to about 6,800, So that's a really good, really big reduction, and therefore the active listing is going up. So that is a general market that happening in today's market. We can see that in summarize, we can see that the interest rate is going to keep going higher, right? It's going to keep going higher for the remaining of the year because of the inflation. We can see that nowadays it's taking longer for listing to be sold, and there are more active listing that the buyers can choose from, which is actually a really good news for the buyers because they can have more variety. Well, the bad news is actually they have to pay more for the same price range, right? But at least they have more options to choose, and they don't have to fight against other people, right? They don't have to fight against other buyers on the market anymore. When talking about some of the buyers say, hey, what if the interest is so high? So how do I pay? You have to have a place to live anyway, right? You either have to rent or you have to own a house. So pick your poison, right? Pick what you choose, pick what you want, right? You want to pay rent to a landlord, for someone to for their investment, or you want to pay for your own house, right? So what I advise to the buyer is that, yes, I understand that the interest rate is go higher, but as long as you are able to afford the monthly payment, and if you have to pay the rental at the same anyway, so why not doing it now, right? Some people also are afraid of the market crash at the end of the year, early at the beginning of the year, and therefore will not buy. Totally understand that. no one knows the future, so no one can be for sure, can be certain that there will not be a crash, right? At this time, though, at least at this time, there's no signal yet. Okay, there's no signal yet that we can see that. But again, what the days on the market is one of the signal, one of the number that are gonna keep following, because if it keeps going up higher and higher, then it's gonna raise an alarm, and will let you know right away. Okay, for the seller though, you are in much less selling power than a year before. So be very careful in terms of pricing strategy. You may need to prepare your house a little bit better. You need to have a better marketing strategy so that you get the best price. Okay, because right now the buyer is going to take a longer time to consider, because they have to be very careful in terms of, okay, I choose this house, but whether the payment is too much for me. Right? So you have to be very careful in terms of marketing strategy, so that you can get as much offer as possible, so that you can increase your price. Okay, for the seller, that is my advice. So be very careful in nowadays market. You still have a little selling power, but it's not too much. So consult with your real estate agent the best if you are thinking about selling. All right. That's all I have for today. Thank you very much, everyone. Again, if you do have any question about any of the information I present in today, please let me know. My number is right there, 602-515-2442. Thank you. Bye-bye.